Ladies and gentlemen, imagine having a financial fortress, one so strong that no economic storm could shake it. Imagine possessing the power to seize opportunities the moment they arise, without hesitation or constraint. This is the power of massive cash reserves, a resource that has fueled the success of the world's biggest corporations, safeguarded economies, and provided individuals with financial freedom. Cash reserves play a crucial role in ensuring financial security and stability, acting as a protective shield against economic uncertainties. Whether for individuals, businesses, or governments, maintaining substantial cash reserves provides the ability to navigate crises, manage unforeseen expenses, and remain financially independent. The importance of having a safety net cannot be overstated, as history has repeatedly shown that those with cash reserves endure economic hardships far better than those who are ill prepared. For businesses, financial stability through cash reserves means resilience in the face of adversity. Companies experience fluctuating revenues, unexpected market downturns, and operational challenges that require immediate attention. A business with strong cash reserves can continue to pay employees, cover fixed costs, and sustain operations during challenging periods. This stability fosters confidence among investors, employees, and customers, ensuring long-term success. On the other hand, companies that lack sufficient cash reserves often resort to loans, layoffs, or cost-cutting measures that can negatively impact productivity and morale. Some businesses even face bankruptcy simply because they cannot sustain operations during a financial crisis. The COVID-19 pandemic provided a real-world example of the necessity of cash reserves for businesses. Many companies were forced to shut down or drastically reduce operations due to lockdowns and supply chain disruptions. Those with strong cash positions weathered the storm, covering expenses even with reduced revenue. They had the ability to pivot strategies, invest in digital transformation, and support employees without immediate financial distress. Meanwhile, companies with little to no cash reserves struggled to survive, many closing their doors permanently. For individuals, cash reserves serve as a buffer against life's unpredictable challenges. Emergencies such as medical expenses, job loss, car repairs, or sudden home maintenance issues can arise at any moment. Those with adequate savings can handle these situations without resorting to high-interest loans or credit card debt. The ability to pay for unexpected expenses in cash prevents financial stress and helps maintain a sense of security. Without cash reserves, individuals often fall into the cycle of debt, making it harder to achieve financial independence. Furthermore, cash reserves provide individuals with the freedom to make important life decisions without financial pressure. Many people stay in jobs they dislike simply because they cannot afford to take time off to search for a new opportunity. Others hesitate to start a business, invest in education, or relocate for better opportunities due to financial constraints. Having savings gives people the confidence to take calculated risks and improve their quality of life without the fear of immediate financial ruin. For governments, maintaining significant cash reserves is essential for economic stability and national security. Countries with large foreign exchange reserves can manage currency fluctuations, support their economies during recessions, and respond effectively to financial crises. Governments that accumulate cash reserves can also invest in infrastructure, social programs, and emergency relief efforts without excessive reliance on debt. During economic downturns, these reserves help stabilize markets, prevent inflation, and ensure continued public services. A lack of financial reserves, on the other hand, leaves governments vulnerable to external shocks. Countries with insufficient cash reserves often face challenges in maintaining economic stability, leading to inflation, unemployment, and social unrest. Many nations have learned the hard way that relying too heavily on external borrowing can lead to unsustainable debt levels, ultimately restricting their ability to invest in long-term growth. At every level, individual, corporate, and governmental, cash reserves are the foundation of financial security. The ability to withstand unexpected expenses, navigate economic downturns, and seize opportunities is directly linked to the availability of liquid assets. While investing and wealth-building strategies are important, nothing replaces the security of readily accessible cash when it is needed most. Prioritizing savings and maintaining cash reserves is not just a financial strategy, it is a necessity for long-term success and stability. Having massive cash reserves provides a powerful strategic advantage, allowing businesses, governments, and individuals to make bold financial moves without hesitation. In a competitive world where financial agility often determines success, maintaining liquid assets offers the flexibility to seize opportunities, manage risks effectively, and stay ahead of the curve. Cash reserves are not merely a safety net, they are a tool for expansion, innovation, and long-term growth. For businesses, cash reserves serve as a strategic weapon that allows them to invest in new opportunities without relying on external financing. Companies with strong reserves can acquire struggling competitors at a discount during economic downturns, gaining market share while others struggle to stay afloat. This approach has been successfully used by corporations such as Apple, Google, and Amazon, which maintain billions in cash reserves to fund acquisitions, research, and product development. Unlike companies that need to take on debt or seek investor approval, those with strong reserves can move quickly when opportunities arise, giving them a distinct advantage. Additionally, having substantial cash reserves enables companies to innovate without financial constraints. Research and development, R&D, is a crucial component of business growth, especially in technology, pharmaceuticals, and manufacturing. Businesses that invest in R&D consistently outperform their competitors, developing new products and improving existing ones to meet evolving consumer demands. With sufficient cash reserves, companies can invest in groundbreaking ideas without worrying about short-term profitability. This allows them to take risks that can lead to revolutionary advancements, ultimately securing a dominant position in the market. Beyond acquisitions and innovation, cash reserves also provide companies with resilience during economic uncertainties. Recessions, inflation, and supply chain disruptions can negatively impact revenue streams, making it difficult for businesses to operate smoothly. Those with significant cash reserves can continue operations, pay employees, and maintain stability without relying on loans or emergency funding. In contrast, companies with minimal reserves often struggle to survive during financial downturns, forcing them to downsize, cut costs, or even declare bankruptcy. Governments, too, benefit from having strategic cash reserves. Countries with strong foreign exchange reserves can stabilize their economies, prevent currency devaluation, and maintain investor confidence during times of crisis. Nations with high reserves have the flexibility to support infrastructure projects, implement stimulus packages, and fund emergency relief efforts without excessive borrowing. This financial strength ensures economic stability and enables long-term national development. On the other hand, governments that lack sufficient cash reserves are often forced to take on debt, which can lead to financial instability and reliance on external lenders. High levels of borrowing may result in inflation, increase interest rates, and reduce public trust in the government's ability to manage economic challenges. By maintaining cash reserves, countries can avoid such pitfalls and navigate global financial shifts with confidence. For individuals, cash reserves serve as a strategic asset that allows them to make well-informed financial decisions. Whether it's purchasing a home, investing in stocks, or starting a business, having available cash provides the flexibility to act at the right moment. Those with strong savings can take advantage of market downturns, buying assets at lower prices, and reaping long-term benefits. Unlike individuals who rely on credit or loans, those with cash reserves can negotiate better deals and avoid interest payments, maximizing their financial potential. Furthermore, cash reserves provide individuals with the power to take calculated risks in their careers and personal lives. Many people hesitate to pursue entrepreneurial ventures or career changes due to financial insecurity. With a strong reserve, individuals can confidently explore new opportunities, invest in skill development, and make strategic career moves without the immediate pressure of financial instability. Massive cash reserves play a crucial role in ensuring economic protection for nations, allowing governments to manage financial crises, stabilize their economies, and maintain public confidence. Countries that hold significant foreign exchange reserves and budgetary surpluses are better positioned to handle economic downturns, currency fluctuations, and unexpected global events. Without strong reserves, nations become vulnerable to inflation, recession, and external financial pressures that can severely impact economic growth and stability. One of the primary benefits of having large cash reserves is the ability to stabilize a nation's currency. Exchange rate fluctuations can impact trade, inflation, and investor confidence. When a country has sufficient foreign exchange reserves, it can intervene in currency markets to prevent excessive volatility. For example, if a nation's currency weakens too much, the central bank can use cash reserves to buy back its currency, increasing demand and stabilizing its value. This helps maintain economic stability and prevents the cost of imported goods from rising uncontrollably, which could lead to inflation and financial distress for businesses and consumers. Additionally, cash reserves provide governments with the ability to manage national debt effectively. Countries often borrow money to fund infrastructure, social programs, and economic development initiatives. However, excessive reliance on debt without adequate reserves can lead to financial instability. Nations with strong reserves can use their funds to repay loans, reducing their dependency on international lenders and avoiding high interest payments. This financial independence allows governments to focus on long-term economic growth rather than struggling to meet short-term debt obligations. During times of global financial crises, such as the 2008 recession or the COVID-19 pandemic, nations with strong cash reserves were able to provide economic stimulus packages, support struggling businesses, and ensure social welfare programs remained intact. Governments with significant reserves had the flexibility to inject liquidity into the economy, preventing large-scale job losses and business closures. In contrast, countries with insufficient reserves were forced to seek financial aid from international organizations or implement austerity measures, which often led to social unrest and economic decline. Beyond crisis management, having cash reserves enables countries to invest in infrastructure and development projects without excessive borrowing. Roads, bridges, energy projects, and technological advancements require substantial funding, and nations with strong reserves can finance these initiatives without taking on unsustainable debt. Investing in infrastructure not only creates jobs, but also enhances economic productivity, attracting foreign investments and boosting overall economic growth. Moreover, cash reserves contribute to national security by ensuring that a country can respond effectively to emergencies, natural disasters, or geopolitical conflicts. When a nation has adequate financial resources, it can fund defense initiatives, provide disaster relief, and support its citizens during crises without immediate reliance on external assistance. This strengthens national resilience and protects against economic disruptions caused by unforeseen events. Trade relations are also positively impacted by strong reserves. Countries with robust cash holdings are viewed as more stable and reliable trading partners, encouraging foreign investments and economic collaborations. When international investors see that a nation has strong financial backing, they are more likely to invest in its economy, leading to increased business opportunities and economic expansion. Conversely, nations with weak reserves often struggle to attract investments and maintain financial stability. When reserves are low, confidence in the country's economy decreases, leading to capital flight, higher borrowing costs, and potential currency devaluation. These factors can create a downward economic spiral, making it difficult for a country to recover from financial setbacks.
Cash reserves play a fundamental role in achieving personal financial freedom, providing individuals with security, flexibility, and the ability to make informed financial decisions without pressure. In a world where financial uncertainties are common, having a strong cash reserve ensures that individuals can handle unexpected expenses, avoid debt traps, and pursue opportunities that improve their quality of life. While many focus on investments, high earnings, or wealth accumulation, the foundation of true financial freedom starts with having accessible cash when it is needed most. One of the most significant benefits of cash reserves is their ability to protect individuals from financial emergencies. Life is unpredictable, and unexpected situations such as medical expenses, job loss, urgent home repairs, or vehicle breakdowns can arise at any moment. Without savings, people are often forced to rely on credit cards, loans, or borrowing from friends and family. This can lead to high-interest debt, financial stress, and long-term economic instability. On the other hand, those with sufficient cash reserves can handle these situations without disrupting their financial well-being. They can pay for emergencies without accumulating debt, allowing them to maintain control over their finances. Beyond emergencies, cash reserves provide individuals with the flexibility to make life-changing decisions without financial constraints. Many people feel trapped in jobs they dislike simply because they cannot afford to leave. Having a financial cushion allows individuals to take career risks, such as pursuing a new job, starting a business, or furthering their education. When individuals are not solely dependent on their paycheck for survival, they gain the freedom to explore opportunities that align with their passions and long-term goals. Financial independence means having the power to make choices based on what is best for one's future, rather than being forced into decisions due to immediate financial pressure. Cash reserves also provide the ability to take advantage of investment opportunities. Financial markets, real estate, and business ventures often present profitable opportunities, but only those with available cash can capitalize on them immediately. Whether it's buying stocks during a market downturn, investing in a promising startup, or purchasing property at a discounted price, having liquid funds gives individuals a competitive advantage. Unlike those who need to liquidate assets, apply for loans, or wait for approval, individuals with cash reserves can act quickly and secure valuable opportunities before they are gone.